Welcome to Part B Mastery, the IRMAA Playbook, the third module in our 2026 training series. This video is designed to give you actionable field strategies for managing baseline Part B costs and high-income surcharges to improve client retention and loyalty. Let's start with the 2026 universal baseline figures every agent needs to know cold. The standard monthly Part B premium is $202.90. The annual deductible is $283. After the deductible, costs split 80-20. Medicare pays 80% of approved services, and the client is responsible for 20% coinsurance. These are the numbers you'll reference in every client meeting. Here's the critical gap in original Medicare. That 20% coinsurance has no ceiling. There is no maximum out-of-pocket limit. If a client has a major health event, their 20% share can grow without limit. This is the single most important selling point for both Medicare Advantage plans, which have built-in out-of-pocket maximums, and Medigap policies, which cover most or all of that 20% gap. Make sure every client understands this exposure. Now let's talk about the IRMAA cliff. IRMAA stands for Income-Related Monthly Adjustment Amount. When a client's Modified Adjusted Gross Income, or MAGI, crosses certain thresholds, their Part B and Part D premiums jump significantly. These are not gradual increases. They are cliff edges. Earning just $1 over a threshold can push a client into the next tier, adding hundreds of dollars per year in premiums. The IRMAA determination uses a 2-year lookback. Here's how it works. The income your client reported on their 2024 tax return is what Social Security uses to calculate their 2026 premiums. The IRS shares this data with Social Security automatically. So a Roth conversion, a property sale, or any large income event in 2024 directly impacts what they pay in 2026. This is critical for pre-retirement planning discussions. Let me give you the full 2026 IRMAA bracket reference. Individuals earning up to $109,000 or joint filers up to $218,000 pay the standard $202.90 premium. Above that, each tier adds a surcharge. Tier 1 premiums are $284.10 per month. Tier 2 is $405.80. Tier 3 is $527.50. Tier 4 is $649.20. And Tier 5, for individuals at $500,000 or above or joint filers at $750,000 or above, is $689.90 per month. IRMAA doesn't just hit Part B, there's a compound effect on Part D as well. Higher income clients face surcharges on both their Part B and Part D premiums simultaneously. This double penalty can add up to hundreds of dollars per month in total additional costs. When you're advising high-income clients, make sure you present the full picture, both Part B and Part D surcharges combined, so there are no surprises. Let's put real numbers side by side. A standard income client pays $202.90 per month for Part B. A top-tier IRMAA client pays $689.90 for the same Part B coverage. That's a difference of $487 every single month, or over $5,800 per year. When you can clearly articulate this impact, clients pay attention and value your expertise. Now here's where you become indispensable. The IRMAA Shield strategy turns the pain of surcharges into client loyalty. When a client gets hit with IRMAA, most agents ignore it because it's outside the scope of plan sales. But you can differentiate yourself by educating clients on why they're paying more, walking them through the appeal process, and connecting them with resources. This positions you as a comprehensive Medicare advisor, not just a plan salesperson. The key tool is Form SSA 44, the Life-Changing Event Appeal Form. Use this decision tree approach. First, has the client experienced a qualifying life event since the look-back tax year? If yes, is their current income lower than the IRMAA threshold? If yes, again, they should file Form SSA 44 with supporting documentation. Qualifying events include work stoppage, retirement, divorce, death of a spouse, and loss of income-producing property. Guide your clients through this process step by step. Let's close with your agent execution checklist. Step 1. Know the 2026 numbers cold, the $202.90 premium, the $283 deductible, and the 80-20 split. Step 2. Explain the no-cap risk of original Medicare in every presentation. Step 3. Screen every client for IRMAA exposure by asking about income. Step 4. When a client faces IRMAA, walk them through the SSA 44 appeal process. Do these 4 things consistently. and you will build lasting client relationships. That wraps up Module 3. Next up is Part B Mastery, the Diagnostic Guide.